Welcome to the Contrarian Capitalist podcast. I'm delighted to be joined today by Durrett of goldstockdata.com. Don, how are you today?
Hey, Robert. Good to be on your show. First time.
Really looking forward to this, and thank you for taking time out of your day to have a chat. Looking at my notes, things that would be great to touch base on would be gold, silver, like a 30,000 foot view, and then a bit on mining stocks as well. I've also got a note here about your thoughts on Fort Knox. But starting with 30,000 feet, you recently put on X that there's been a weekly candle for gold has had 8 green candles in a row, and then you said that it wouldn't surprise you if there's maybe one or two more. Maybe we get to that $3,000 mark, and then some form of a correction. I just wondered if you could just touch on or go into a little bit more depth on that, please.
Yeah, sure. So my I'm an investor in gold and silver mining stocks, and I created the website because I needed more data to do my analysis, and I couldn't find any. And so I'm all about chasing alpha, but I'm about chasing big alpha. So I don't want I don't want a one bagger, two bagger. I'm kind of like in the Eric Sprott camp where I want 5 and 10 baggers, and I want to make a lot of money. And so how do you do that? So I'm focusing on how that's possible, if you will. So there's one possibility is to find stocks that are going to go up, but that's really the small piece of the puzzle. The big piece of the puzzle is the gold and silver price, because the gold and silver price is really where you make your money. And so if you look at history, um, the miners have only done well 3 times. The 1930s, homestake mining just ripped in the 30s because, and what did we have in the 30s? Economic turmoil. Then the next time we had the miners do well were the 1970s, 71 to 80, 9 years, and the miners outperformed the stock market, gold. And so the reason why is because you had economic turmoil. We had the two energy crises, we had recessions. Then through the 80s and 90s, the miners did nothing. And the reason why is because 81, Reagan comes into office, gets elected in 80, comes into office in 81. By 82, the miners are crashing, and we go on a run from 82 all the way to 2000. And so that's that 18-year run, and then gold takes off again because we have the dot-com bubble pop, and then we had 9/11 come right after it. So you had two, then you had the great financial crisis in the middle of the decade, well, 2007-8. So you had three crises in the 2000s, and you could say you had three crises in the 70s. And that is what drove you to make tons of money in the miners. If you look at what gold did from 71 to 80, it went from $35 to 850, which is kind of insane, right? But then from 2000 to 2011, it went from 250 to 1900. You're talking about two massive moves in gold, and I call both of those fear trades. So we haven't, and that now we've basically from 2009, and when the recession ended in June of 2009, so it was actually early 2009 till now, we haven't had any economic turmoil. We have not had a crisis. You could say 2020 was a crisis, but they injected so much money, it was, kind of short-lived. You didn't have massive layoffs per se. It wasn't a normal recession. It wasn't a business cycle. So we had like 15 years of economic growth. And if you look at the S&P 500, all it's done is just straight up from 2009. It actually went from 666 at the bottom to today 6,000. So almost a 10 bagger. I don't think it's going to be a 9 bagger. So we're looking like about an 8 bagger right now. You'd have to go over 7,000 to get a 10 bagger, but 8 bagger, which is amazing. So I've been saying that the only way that you're going to get a breakout in the miners is you have to have an end to this bull market on stocks. So I've been focusing on the S&P 500, and everybody else is focusing on the gold price, and they're all excited because gold broke out 2019. Gold's been on a tear. It broke out about 1,400 gold, and it's been on a rip. So gold's been on a bull market for quite a while, 1400 to 2900 without any serious corrections. Um, and that's all fine and dandy, but silver and the miners have not. And so I've been saying that you need all three in order for the gold and silver miners to do well. You need all three to be in a bull market. Now, if you look at the HUI went down below 350 in 2013. It was at 625 in 2011. So it went from I think 635 in 2011. It went from 635. It dropped below 350 in 2013. So it took some time, but that's quite a drop. 635 to 350. Then it went all the way down to 150. Um, Maybe a little lower than that. And that was your channel. Your channel is basically 350 to 150. We've been in that 150 to 350 channel now. We're still in it. We haven't broke out. We touched 350 twice. We touched it in 2020, August of 2020, and we just recently touched it in October, I believe. Um, so, but it didn't break out. And so 350 is the breakout for the HUI. We're currently sitting on 330. And so I've been telling everybody, this is a fake out, not a breakout. And the reason why I say that is because I don't believe that silver can get above 35 and the HUI can get above 350 and kind of join gold and start ripping higher without economic turmoil.
Mhm.
So I keep saying we need the economic turmoil. So if we need the economic turmoil, that means the stock market's going to go down. And if that happens, if the stock market goes down, that means gold's going to get pulled down with it. So we've had this 8-week run, and the 8-week run, I think, is going to go a little further. I was saying right when the year started that I thought this thing would last definitely through January and February. This bull market in both gold and the S&P through January and February because of Trump. Trump basically gets the honeymoon period. Basically, nothing's going to happen until he gets inaugurated June 20th, January 20th. And then he goes into his honeymoon period, which is in now, and that's
Mhm.
going to last a little bit. So I thought mid-March, we have the Ides of March, right around mid-March, I think the wheels start coming off, off the train that it starts getting dangerous around mid-March. So I think we have about 2, 3 more weeks of this move higher, and then we're going to correct. The unknown is this just going to be a little mild correction in gold back to 2800, 2900, and then we bounce and we go higher, and the stock market doesn't do much. It's just a gold correction on its own, which hasn't happened because they've been basically correlated. So my feeling is that this gold move at 8 weeks up is kind of foreshadowing a correction in both gold and the stock market. We'll
Mhm.
have to wait until the middle of March to see what happens. But Trump said he's going to throw on 25% tariffs on cars, which is probably going to impact Europe, which is going to impact BMW, Mercedes-Benz, Volkswagen. That's huge. And so maybe the markets start getting a little nervous about tariffs in the middle of March. And so we hit this wall. I think what's going to happen is the HUI is going to get to 350, maybe 360, somewhere around there. It's going to be kind of a false breakout above 350. A lot of people are going to jump in thinking this is it, we're good. And then we're going to crash down. And I think we go from 350, maybe as low as 250 on the HUI. But I don't think we're going to get that low. I think 250 is the floor, but I think 265, 270, 275 is in play here for the HUI, which would be quite a rug pull actually. If you bought at 350 and we go to 270, that's a serious, I mean, that's 20% down. So you got to be thinking about what's coming. But me, I'm all about the future. I think gold's heading, I actually moved my target higher. I had
Mhm.
my target $4,000 gold uh, before this year started. I've been at $4,000 gold for quite a while, and I raised it this last week to 5,000. So I'm very bullish gold. I raised my target to 5,000. So that actually means my target on silver went up a little bit. So I have my, I think we're going to go to a 40 GSR. And so I had it at 4,000 gold. If you use a 40 GSR, that means gold is at 100. You use a 50 GSR means gold's at 80. So, and I think 50 is easy for the GSR. So you're looking at 80 to $100 silver. That's huge.
Hmm.
And nobody is buying gold silver miners thinking that silver is going to 80 to 100. Nobody, except for me, a few people, but most people are not expecting 80 to $100 silver. The irony is a lot of people are expecting $4,000 gold. So it's fairly interesting. But yeah, I think we're going to $5,000 gold, and the reason why, and we can talk about it.
Yeah, well, definitely we can get onto that. Just going back to where we're at the moment, 'cause I know it's a question I've seen on social media quite a lot about, are we going to get this to this $3,000 level
Um,
sooner
Robert,
rather than
Robert,
later?
Robert, I need to take a 30-second break. I'll be right back.
I think the question, Don, that a few people will want to know, because I've seen all sorts on social media about are we going to get to $3,000 gold sooner rather than later? So is your belief with everything that you're looking at is before this correction, shall we say, in March, uh, are we expecting that gold price to top $3,000 in the very short term?
Yeah, absolutely. We're right there, 29.50, spots at 29.30. I definitely think we're going over 3,000 here before the correction, before a correction of 5 to 10%. Could be a little more than that, but yeah, I think definitely we go above 3,000. I'm not sure if we get to 3,100, but 3,100 is actually in play here, depending on how what unfolds, especially regarding the LBMA and the COMEX.
Mm,
That's kind of a wild card here. The other thing is we're seeing lease rates really explode higher, kind of getting crazy. Like the GLD yesterday was over 10%. It's usually 1%. It's like, so we're seeing some really wonkiness here. So I, I don't think we're getting to 3,100, but I think it is in play between now and April. And if we don't correct by April, I definitely think we'll correct in April. I don't think we're gonna. I don't think we go all the way to May here without a correction. Again, I mentioned this in my first answer. The question is, how deep is this correction? Number
mm,
one, and number two, does the S&P uh, is the S&P the reason why it corrects? Um, we don't we don't know what's going to push gold down, but one thing we're seeing a lot of stability in interest rates and the dollar. I mean, we've basically been at 4.5 and 107 and or 107, 106, 4.4, 4.5 in the 10 year. And those seem to be pretty stable.
mhm.
So if those are stable, you don't really have a driver to push this stuff down. So I think what's going to happen is I think the driver actually is going to be tariffs and the market, the S&P pushing gold down, which is weird. It's like gold's like hit its, it can only go up so far and it has to correct, but it won't be
Mhm.
gold correcting. It'll be the S&P correcting and gold following it. That's how I see it.
No, I think that's fair enough, and I think the reason that I say that's fair enough, and you touched on this earlier, is that there are other factors in play. And let's get out of that short-term time frame. Let's look at a more medium to long-term frame. There's so many different economic plates and generic plates spinning that are very favorable for gold. And so, what have you seen, or what's your understanding of them to make you push your price or your prediction up to 5,000? What are we looking at? What should we look for to see that gold price move further ahead in the future?
Yeah, I think that's a really good question. And I think it's a combination of factors that we're already kind of on the table. In other words, this run from 2000 to 2900 last year, up 27%, had nothing to do with Trump. I mean, the run started well before the election. I mean, it started in March, right? This had nothing to do with Trump. And it basically was Triffin's dilemma starting to play out. And Triffin's dilemma is is basically all about the reserve currency creating inefficiencies in global trade, where the currency becomes too strong. And once it becomes too strong, it hurts both those that are using that currency and the current in the country that isn't. Like the US, it hurts the US because we can't export stuff because our currency is too strong. And then it hurts other countries because we're exporting inflation and they have to use that currency and they need more of it. And it just eventually it blows up. That's Trippen's dilemma, is that eventually it blows up. In other words, the world reserve currency it can't work. It's kind of like democracy. Democracy only lasts a certain period of time, and those without the money vote themselves the money. It's similar to like that. And over time, it dies. It's the same thing as global countries that are like the superpowers. At a certain
Mhm.
point, they die. And so Triffin's dilemma is playing out before us right now. We're reaching the end game, and that's the reason why gold is going up. And the global south is like saying we don't want to use that. We're done. We're tired of importing this inflation. We got to get rid of it. Then the other thing there's so many variables here. It's almost mind blowing. And this is the reason why I got it to 5,000. The other one, Basel III.
Mhm.
So Basel III, the U.S. really was kind of tried to prevent it. They didn't want to implement it. They're like, we don't want that. Basel III makes gold a tier one asset. It's a huge boon for gold. Huge. And that's the reason why. So the central banks now have two reasons to acquire gold. One, it's a tier one asset. And two, you have the US reserve currency starting to break down, which puts unbelievable pressure on the US bond market. Because without that ability to have the US currency as the reserve currency, we have the whole world kind of supporting us. We can print whatever we want, and they're going to buy our money, and we can have as much debt as we want. So the bond market becomes fragile when Trippen's dilemma unfolds. So you have that, and then you have this Basel III thing going on. So the Basel III hasn't been implemented yet, but we're getting close. Basel III is supposed to be implemented in Europe next year, 26, January of 26. Europe's supposed to implement Basel III. So that's putting huge upward pressure on these countries. And then the US is like, well, we're not going to do it in 26, but we'll probably do it in 27. And they might try to push it off. But if Europe does it in 26, the US will probably have to do it in 27. And I'm telling you, Basel III is really important for gold because basically you make it a tier one asset. It changes the whole dynamics of gold as collateral. The way they put it on their balance sheet, it's you do some research on it and you'll see what I mean. It's a real big boon. Okay, so you got those two things going on, right? Both
Mhm.
of those, and then you have the U.S. economy, which is over leveraged with all this debt, and basically the entire world's over leveraged. But the U.S. economy is over leveraged, and our bond market might not be able to kind of put Humpty Dumpty back together again if we go into a recession. We start seeing banks close, we start seeing bankruptcies, and then suddenly we can't borrow enough money because foreigners won't help us now. Foreigners won't get in our bonds. So we got to fund it all internally. So
Mhm.
I don't think we can. So you got that going on. Um, then it's like a house of cards. Then you have U.S. Treasuries have always been considered risk-free assets. So in many respects, the global economy is built on this foundation of risk-free assets, and that risk is slowly deteriorating where it's no longer risk-free, especially when you get to 5-year bonds. Okay, we're going to say 3 year, 3 month, 1 year, and 2 years those are good. Those are good. Those 5-year ones, oh my God, I don't want those. So everything seems to be cracking, if you will, at the seams. Now, now we'll get to the $5,000 number. Now Trump comes in and he says, I'm going to revalue our gold. And he didn't throw a price on it. So they could do spot, they could even go a little higher. Now, the thing that's really interesting about this revaluing, currently our gold, I think we have like 8,000 tons. It's currently valued about $750 billion at $2,900 gold. It's currently valued at $42 an ounce. And the Treasury actually holds these gold certificates. So they've already given us the way that it works. It's all in counting shenanigans. So the U.S. Treasury, they own it, and we give them this so-called gold certificate. We say, okay, here's the gold certificate. You don't really own it. You just have a claim against it. They don't. Fed doesn't own it. They just have a claim. They have these gold certificates. They're like, okay, but we're keeping our physical. But you can have that. We'll give you this little certificate over here. Now you can't it's the Fed, right? They can't demand delivery. They
Hmm.
can't demand payment. It's all down to shenanigans. But we'll give you these little certificates and you can, and then this is where it gets real interesting. We'll give you these little certificates and then you give us cash. You just print up your digital money and put it in our bank account. And they did that in 1970. Now they're basically saying we're gonna take those little certificates and we're gonna replace them. We're gonna give you new certificates, and then you're gonna print some money and put it in our account. So they're gonna print, I don't know how many, $700 billion, and they're just going to throw it in our account. And then the Trump and what this is going to do is it first thing it's going to do is it's going to acknowledge this is crucial. It's going to acknowledge that gold is actually a valuable thing. It's no longer, this worthless, whatever they call it, right? Where everybody's making fun of gold. Now all of a sudden, wait a minute here. Gold's real. Gold's actually a real thing. So it's going to get into it's psychology wise. People are going to start to think, I want some gold. If they're revaluing it, they can. Here's a key one for you, Robert. They can revalue it now. They can keep revaluing it. Like every time gold goes up
Hmm.
500 bucks, they can say, "Hey, Treasury, send me some more money." Right? And they never have to give them anything back. If gold goes down, so what? It doesn't it doesn't matter. But if it goes up, give me some more money. And then they can play all kinds of shenanigans with once they have that gold, once they have that cash on their balance sheet. Now they can play with that money. What are we going to do with it? We can, and one of the things they said they were going to do, it makes no sense to me at all. Is okay, so first they take all those gold certificates and they get this cash for it, right? Now they're sitting on the cash. But they still own, now they can rehypothecate the gold. Now the gold is still sitting in the it's still sitting there, right? They still own it. So they can basically say, okay, well, now we're going to take that gold and we're going to back bonds, 50-year bonds with our gold. Rehypothecate it. Like the Fed they have those certificates. Don't worry about certificates. Then that's not real. We're just giving them. But the actual gold that we actually own, we're gonna give you some of that gold. Like we'll back some of our bonds and we'll give you the gold. We won't give it to the Fed. We'll give it to you. I don't know how the heck they're going to do it, but they don't want to back it with cash, right? They can't.
Hmm.
They're not going to
Yeah.
back the bonds with cash. They're going to back the bonds with gold. But if they take, it's all convoluted. But the bottom line is this: is that if they do any of this stuff, it's good for gold. It makes gold more relevant. But and there's one other point I wanted to make about this whole gold reval thing is um, it doesn't matter what they do now. They've actually put gold on a path to higher valuation. So this is what I mean. It's win-win for gold. Win number one is they don't do the audit. They never do the audit. So if they don't do the audit, they can't get any money from the Fed,
Hmm.
right? They can't. They got to, in order to get money from the Fed, they got to do the audit. If they don't do the audit, that means they don't have the gold. If they don't have the gold, that's going to create panic
Hmm.
because the bond market will be more fragile. Oh, the government, US has no reserves. They have no reserves. They're broke, right? It'll put fragility into the bond market. So we win there. If they do the audit and it's real, so I think they don't have any choice now but to do the audit and either lie or tell the truth. And they have to lie and say the gold's there or tell the truth and say the gold's there. But they can't say we can't audit and they can't say we don't have the gold because that'll cause panic. So they're going to do the audit and they're going to say it's there. Is it there? We don't know, but that's going to happen. So it's a win-win for gold. Gold That's the reason why I popped it to 5,000, because gold is on a it's rambling right now. It's
Mhm.
rambling, and any correction that we have, I I had my before this year, maybe even January, I had my low for gold. I kept raising it up. I had my range for gold 2350 to 2450. And then last week I raised it to 2500 with all this LBMA stuff. And now I've raised it 2600. I think 2500 is still a kind of a floor there, but I don't think we go below 2600. And I think there's a good chance that 2700 holds. I tweeted this out yesterday. You mentioned it, the eight uh, weekly
Mhm.
candles, green. I think that the floor is going to be 25, 26, 27, 28, somewhere in there. 29 is, I think that's fantasy. I don't see 29 holding. We're at 29 now. So 28 seems like very unlikely for the cycle low for the year. So for me, it's 25, 26, 27. And I think 27 has a good chance of holding. And if it does, we're we're heading, my uh, target for this year is 32 to 34. I think we easily get into that range if 2,700 holds.
A lot to unpack there. Thank you for your answer. And I think it's very important to give that 30,000 foot view, because I think that what I find is that people that are holding the physical, for example, their mentality is completely different to those that might be trying to trade the markets. And I see that it's quite a lot of people throw their toys out the pram quite quickly. I do a bit of both personally, but I've always said that with owning physical bullion, that the long-term play. I started doing it in 2020. It was all a case of a bit too much time on my hands, do some research, really dig into monetary history. And for me, it's wealth protection, all that sort of stuff. One of the reasons, and it wasn't top of my list, was if there is a revaluation. Now, that could still happen, that could not happen. I don't know. It doesn't really bother me. It doesn't keep me up at night thinking about it. But I appreciate you going through all those points, because these are the things that people need to really become awake to. That these things are happening right now, but sometimes it's those time frames that although it's happening, we might not see it very clearly, because these processes, these things like economic turmoil, for example, they just take time to develop. On that, Don, thinking about it, a lot of people I know, like miners, are mining stocks. Obviously, that's one of your fortes. There's been quite a lot of news about Barrick in the last week, and then a lot of companies seem to have reported well, but yet their stocks or their prices seem to have gone down. Now, I'm not going to claim to be a guru on any of this. I'm just going to ask some very basic questions. In Let's start with Barracks. They're one of the biggest ones. What has been going on with them? Their results seemed okay to me, but what's been going on with Barrack recently?
Well, last year, both Barrick and Newmont, their ASICs kept going up quarter after quarter after quarter, and investors just got tired of it and just started dumping them. And their free cash flow multiple, they've never really kind of came out of that hole. Barrick was trading at a 9 multiple last I looked. I think they went up a little bit today, and then Newmont at an 8 multiple. I mean, these are well below their historical norms, and it really has nothing to do with their margins. They're at 2,900 a gold. Their margins are fine. They're making a lot of free cash flow. I think Barrick's like 3 billion, and at 2,900, I think even maybe a little more than that. And Newmont is like 4 billion. Um, and so they're generating a lot of free cash flow, but nobody wants to own them. And because sentiment, a lot of it has to do with the big money on Wall Street. And Wall Street is like, I'm making money here, on betting on high tech and the Qs. and each, just indexes. I don't need to invest in gold mining stocks or silver mining stocks. Plus, those stocks they're doing terrible. They're not trending. I'm not chasing the momentum. All I'm doing is gambling that momentum is going to begin. So there hasn't been any momentum to get anybody interested in jumping on them. But I think what's going to happen. So, like I said, you need a fear trade where they're not making money in the tech stocks or the Qs, and they're like, okay, where can I make money? And then that's when the miners start going. You need this fear trade to kick in, and so we've been in this negative sentiment for miners since 2013. So you're looking, it's basically 10 years of hardship. And it's like nobody's. You need a trigger to get people interested. And the other correlating thing that's kept people out of the miners is the silver price. Silver, the all-time high for silver in 2011 was 49. And if you change that, if you equate it for inflation adjusted, it's 68. Well, gold is what inflation adjusted for 2011 was 27.50. We're well above the high in 2011, well above it, $150 above. So we're literally at all-time highs adjusted for inflation for gold, which is mind-blowing. And silver is 50% below. It's actually more than 50% below. 50% below would be $45, 46. We're more than 50% below. So the silver miners, they don't have the margins. They're not healthy. And so I think the gold and silver miners kind of trade together in many respects. Like Coeur Mining and Hecla Mining, they mine gold and silver both. So you need margin in both to get these stocks to move. And I think it's holding the whole sector back. We need silver you need at least $25% margins. Right now, the gold miners are all at 30% or better on average.
Mm-hmm.
And the silver miners are they're under 15%. They're right around maybe 15%, 27, but they're not at 25. So you need to get to $35 silver just to get the silver sector healthy. That's starting. That's like the starting line. So that's really holding back both the gold miners and the silver miners is the silver price. We need to get the silver sector healthy. And once the silver sector is healthy, they're going to push each other. Companies like Coeur and Hecla that do both gold and silver, they're going to start ripping higher because they're going to be making money on both sides of the equation. Right now, they're only making money in gold. They're not making money in silver. They're not making enough. The margins aren't high enough. The average margin right now is about $4 or $5. Mm-hmm. That's not enough. It's not generating enough free cash flow. Hecla just got battered. They have $4 margins, and they just got battered because it wasn't good enough for the street. The street said those margins aren't good enough. It went down 10% because their margins aren't big enough. But if silver goes up another buck, so it's went up since they did that. Silver's up maybe not $1, but I think at least 50 cents, 75 cents. Silver goes up another $1, and suddenly their margins are good enough. Mm-hmm. And then Hecla rips to like $7.50 in a hurry, in a heartbeat, because now suddenly the margins are good enough. So the gold and silver miners is the strangest business on the planet. They do not have customers. Like if you go to school in business school, you analyze who your customers are and what they need. Now, what business doesn't have customers? Mm-hmm. Gold and silver business don't have customers. They have buyers. And the buyers are lined up. They just opened up the door. They decide who they're going to sell to. They got options. Okay, we got buyer A, B, and C. Who do we sell to? I mean, they have buyers. They don't have customers. It's bizarre. The other thing that's bizarre is they don't have competitors. Hecla and Coeur don't compete against each other. They don't. They do not have competitors. All they have is they just have buyers. They're at the mercy of the gold and silver price. That's it. If gold and silver margins are high, their business works. It's easy as you just take it out of the ground, you sell it, you make money. It's the strangest business. But and people analyze it wrong because they treat it like a regular business.
Mhm.
You don't analyze these companies from a financial standpoint like you do PEs, like another business. You look at the valuations and you do all that. No, you don't. That's not what you do. You look, for me, you look at free cash flow and you look at potential free cash flow down the road and you look at potential costs down the road. Like I said, nobody is buying silver miners today with the expectation that the silver is going to be between 80 and 100. Because if they were, they'd be buying the hell out of them. Because
Mhm.
that's what I do. That's what I do. I could care less. I'm not selling Hecla until it gets to $80 silver. It's not
Mhm.
for, I'm not selling. There's no reason to. I'm going to take profits at 50, 60. Why? It's going to 80, so wait for 80. It's like it makes no sense. But nobody's buying them. People will not buy Hecla until silver gets to 35, 36, 37. Then they'll buy Hecla because it's trending, because that's what they know. That's how normal stocks behave. I'm going to do it. I'm going to wait. I'm going to look at its fundamentals. How can you analyze a company on fundamentals when the price of silver trumps all of that stuff? The price of silver is
Mhm.
so much more important than all those fundamentals. Throw those fundamentals throw them out the window. The fundamentals are where the location is, what their costs are, what the mine life is. These are the fundamentals. The fundamentals, that's why it takes 2 years to understand this, because the fundamentals are not financial. The fundamentals are other things. What the
Mhm.
grade is, do they have, what's the pipeline? Are they going to grow? What the balance sheet is? Balance sheet is a financial one, of course, but it's a little bit different. Can they raise money? Where the location is? Do they have a good management team? Like management teams are much more important in mining than they are for other businesses. It's a different animal. But what people really miss more than anything else is that gold and silver go in cycles. They're contrarian to to the economy, because if the economy's doing bad, they're doing good. They do exceptionally well when the economy's doing bad. Homestake's a perfect example. In the 30s, Homestake just they made a fortune in the 30s when everybody else was losing money. Fear trade, and so you have to you got to think of this whole industry from a whole different perspective, and think in terms of where's this company going to be in 2, 3, 4, 5 years, and then how valuable is it going to be in 2, 3, 4, 5 years if gold goes to 5,000, if silver goes to 80, and then you're the other thing. Here's the other thing about gold and silver mining is it's not investing, it's speculating. We are speculating that the silver price is going higher. That and gold price is going higher. We are speculating. We're not betting on the fundamentals of the company and what's happening
Mhm.
today and that it's going to exist. Like Microsoft. Microsoft is Microsoft is fundamentally built on the economy, but and this is the reason why people love to invest in it, it's somewhat um, not impacted by the economy per se, because it's kind of built in. People have to use Microsoft, they have to buy their stuff. Apple's kind of similar. You got to have a phone, you got to replace a phone. But they do get impacted. They will get impacted if the economy slows too much. But as long as the economy is flat to growing, they're probably doing okay. They have this kind of built-in customer base, if you will. And so people that they find people, that's a whole different animal than that's investing. The Warren Buffett thing, valuation. He likes to invest in companies like See's Candy and Coca-Cola and Bank of America. These are companies, as long as the economy is growing, he's making money. That's investing. This is not. This is speculating on the economy going down. It's speculating on the price of gold and silver going up. It's speculating on the BRICS currencies impacting gold. It's speculating on all of these aspects that are impacting gold. There's all these areas, and we're just in many respects it's gambling. we're just betting. We're basically putting our money down and we're betting that Hekla's free cash flow is going to go up 5x over the next 3 years. And we don't know if it's going to do it or not. We're betting that it's going to happen. But I always say that you should never invest in gold and silver miners for the next 12 months. It makes no sense because there's so much unknowns that you don't know if you're going to make money. It's just, but however, if you do it from a different angle and you think in terms of 2, 3, 4 years down the road, then your odds increase dramatically. But it frustrates me to no end when people look at Hekla's, they go down 10% and they lost money, and people get really angry because everybody has this mentality of short-term investing.
Mhm.
Down 12%. It didn't bother me in the slightest degree at all because I could care less about Hekla's quarterly returns. As long as the company is not fundamentally damaged, it
Mhm.
still has leverage. As long as the leverage is still there, that's all that matters to me. Is the leverage still intact? If it's still intact, then I'm riding this guy. I'm riding it to $80 silver. Now, if we stay at $30 silver for 5 more years, I'm screwed. That's where the speculation comes in. But if silver goes to 50, I'm making a lot of money. So that's where the speculation comes in. So you have to think of it that way. You have to think of it long term. Why are you doing this? Um, Now, a lot of people like to trade this, trade for, and trading is always short term. And so they're like, they're trading the momentum, trading this, and they're trying to. The reason why traders are drawn into the gold and silver because they're very volatile, and traders love volatility. So a lot of traders come into gold and silver, but it frustrates me to no end because when traders come into gold and silver, they don't know anything about the kind of fundamentals that I talk about. The
Mhm.
only thing they care about is price. Price is all they care about. And so, we have a completely different mindset on how you look at these companies. And then, I get trolled a lot because they're analyzing it all from TA stuff, and I'm looking at gold and silver from fundamental and speculative and long term. So we're looking at this stuff differently, and it can get a little frustrating, but that's the way I look at it. So I'm trying to educate people on making big alpha, speculating on higher gold and silver prices. And I think we're just about there. I really do. I think if we go into a recession this year, I think that the path of gold to 4 or 5,000 is going to be extremely strong, because once we go into recession, then everything just starts breaking down that helps gold. I mean, breaking down, what I mean by that is the foundations that are hurting gold, which is the lack of sentiment in gold in the miners, for instance. The sentiment starts getting better, and sentiment's been dead for 10, 11 years. And so sentiment starts getting better, which is once the fear trade comes around. I mean, I mentioned in the 30s with Homestake. Why did Homestake do so well in the 30s? It was because there was nowhere else to make money. And
Mhm.
so in the 70s, why do these miners do incredibly well in the 70s? There's nowhere else to make money. Where do you make money? So once the stock market is flat to down, people start looking, where do I make money? And they're like, whoa, wait a minute, look at those free cash flow that Newmont's got. They're making 100, um, 100 1 billion, excuse me, every quarter.
Mhm.
$1 billion in free cash flow every quarter. What's going? And I don't own this thing, and I want some of that. Oh, also, the other thing about that's going to draw people into these things is dividends. So once these companies clean up their balance sheets and they start throwing out big dividends, that's the other thing is going to draw people in is the dividends. So you're going to have if you get above $3,000 gold and it stays there for 12 months, all these companies are going to clean their balance. All the big producers are going to clean up their balance sheets and start throwing out big dividends, and their multiples are going to expand. The average multiple right now is between 6 and 7 for producers.
Mhm.
it will easily double to 12, 13, easily. And then, so all the stocks are going to double. So you're getting a 50% off valuation here. And that's like the starting point. That's when the momentum starts, right? So when Barrick and Newmont both double, everybody's going to see that 100% rip, and they're like, I want to own some of that, and that's when it starts. That's when the momentum begins. That's when the sentiment improves. But I think the key to sentiment for me, the key to sentiment is going to be silver going from 35 to 50. When that happens, when silver goes from 35 to 50 and then it doesn't crash, because everybody's going to say, well, every time silver rips high, it crashes. Silver goes from 35 to 50 and then it doesn't crash. That's when sentiment is going to go nuts.
Hmm.
Because not only are the silver miners going to benefit, but the gold miners are going to benefit too. Newmont, they have one mine in Mexico called Penasquito that mines 16 million ounces of silver. That's I did the math on it, and it's like $1 billion in free cash flow at $50 silver. Maybe I'm a little aggressive there. I have to do the math. So 16 times 30. No, it's not a billion. It's 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 more like 500 million. But I think
Hmm.
it started, but it expands. The higher silver goes, it starts getting bigger and bigger. But it's about 500 million in free cash flow. So all of that lowers their cost. So it's when silver goes from 35 to 50, Newmont's costs go down, and then Newmont share price, then they become a market leader and they go higher and they pull everybody else up. So silver going from 35 to 50, I think is the game changer. Um, that is the beginning of the bull market in the gold silver space that I think is going to last 24 to 36 months. So we're at the very beginning of this stuff. We haven't even we're at the starting line. Like I said, if you look at the HUI chart, 350 is really the breakout, and we're at 330 right now.
Don, there's so much information there. And again, I thank you for sharing all of that. What I take from that is that there at the moment there's a lot of opportunities out there as well. And I'm going to link to a couple of YouTube videos that you've done recently about various mining companies. So I'll link to them in the Substack post as well, so people can go ahead and watch that. What I understand from everything that you've said is there's a lot of opportunity out there at the moment. It's a sector that hasn't got many eyes on it for a multitude of reasons, mainly Wall Street, etc., etc. And if people are looking to either invest or speculate, whatever word you'd like to use, then really, to me, the one question people should be asking themselves is, what do I think is going to happen to the gold and silver price moving forward? And if you think that's going to go, or they are going to go substantially higher, which of course there are no certainties in life, but I think we would say the same thing. There's a high probability that it might happen. If that's going to happen, then the chances are your mining investments or speculations obviously do some homework as well. The chances are you're going to be rewarded quite well once those prices go higher. But that's what I deduce from it. You've got to have the belief that the gold and silver price is going to go much higher in the first place.
Yeah, I've been tweeting, I don't know, for the last couple of years, saying that the only reason that you hold gold and silver miners is because you believe that MMT is insanity economics. MMT is the idea that debt doesn't matter. So if you think MMT is insanity economics, then you also believe that the US is headed for big trouble.
Mm.
And so if that's a strong, if you hold that belief very, very strongly, then you can handle the volatility in the gold and silver miners because your foundational belief is that gold and silver are going higher. Okay, so I think that we're just about at the breakout. So we've been in this channel for since 2013, 11, 12 years, and I believe we're about out of it. So I want people to be able to buy these quality stocks before we get out of the channel. But we're at 330 right now. I actually think the best time to buy them is wait for the correction that's coming and buy them with the HUI somewhere around 275, 285. I
Mhm.
would be patient here. Instead of buying at 330, I would wait and buy it 280, 275. Okay, so I'm gonna throw that out there. But I've done 5 videos because I'm trying to get people um, prepared to basically to buy all these quality stocks prior. So I did a top. These are all my YouTube. These are recent videos. So if you can find my channel, it's at Don Durrett, and you just click on videos. Look at the last 5. I did a top 20 silver, a top 30 gold miner, and then I did a top 20 or 25 gold producers. And then just in the last 2 days, I did a top 10 majors and a top 10 emerging majors. So there's 5 videos for you to check out. Um, they're very recent, and I basically, if you're after quality, these are all super high quality stocks. If you're not after, these lottery picks,
Mm.
exploration plays, real long to long shot. These are high quality risk reward stocks that, other than the top 10 majors, they're all 5 baggers or better. But the top 10 majors are all 3 baggers, which is still huge. I mean, because you're getting in early here. I'll end it there. And yeah, thanks for having me on, Robert, so we could share some of this information for people.
No, absolutely, Don. It's a pleasure, to be honest. It's one of the reasons for getting you on is that I know you do a lot of fantastic work out there, and I'm all about helping people make as much cash as they want as well, and that's by having these sorts of interviews and all of the above. So I think it would be fantastic to maybe catch up a bit later on in the year just to see what the lay of the land is. And then in the meantime, for those people listening to the podcast version of this, if you head over to contrariancapitalist.substack.com, there'll be a post with this, and in there, I'll put Don's links to obviously YouTube, which we've mentioned before, X as well, and also on Substack as well. I urge you to go and please do check out Don's work. Also, goldstockdata.com as well. Don, thank you very much for your time. It's been an absolute pleasure. I think we've covered a lot of ground there. I look forward to catching up with you later on in the year.
Yeah, maybe June 1st. Put me down for June 1st. I think that'd be a good time. I wanted to say one thing about my website. I don't talk about this enough in a lot of my podcasts. So my website, it's not a stock picking service. It's a data service. So I want you to do your own research,
Mhm.
your own due diligence. So that's why I created it, for data. So, but if you do own any gold, silver miners, then it's an outstanding resource. And the reason why is because I give you list. I give you a list of leads, and then you can go do your own due diligence. But I also give you ratings on all the companies, and I give you an overview of all the companies, my own personal little 3 paragraph of what this company does. And then I give you a whole bunch of data. So it's fabulous for people that already own gold, silver miners. If you don't own any and you're like, this sounds great, you want to read my book first. Read my book. My book explains exactly how to analyze gold and silver mining stocks. The 10th edition just came out. It's on Amazon. Read the book, and then you can decide if you want to get involved in it. But thanks for having me on, Robert.
But Don, perfect. Thank you very much. I will put links to all that I need to in the notes, and I'll put a note in my diary for June. So hopefully catch up with you then.